Hey everyone, welcome to Life in the Bluegrass with Bart Daly. Hey, so question, have you ever gotten a mortgage before? Are you a new buyer? Listen, your mortgage approval does not start when you walk into a bank or mortgage organization. It starts when you decide that Amazon Prime isn't a down payment plan.
You are looking at a prime customer, everybody. 2 days free shipping for this guy.
All right, so today we're going to be walking through the steps in the process to get a mortgage. So get out a pen, get out a paper, and let's not get stressed out over one of the largest investments you're ever going to make in your life. Now, didn't mean to scare you there, but the idea here is to not get stressed out. Don't get broke. Don't become broke. Whatever. And explaining to you, that car loan that you took out last month, how that's hosed your situation. So let's go ahead and jump in. Hey, buyers, if you would, down in the comments, let me know what's the one thing you wish you'd known before getting pre-approved. Just drop it down there and let me know. And while you're down there, go ahead and hit that follow button and let me know what your thoughts. This is certainly a video that everyone should consider sharing with their friends. If you've already got a house, share this with your friends who are looking to buy a house, because this is going to be a good one for you. Oh, I once had a buyer who had applied for a mortgage, and 2 days later, after they got everything and it was in process, they went out and bought a brand new truck, financed it, brand new truck. Guess what that tiny little investment cost them? It cost them their house. Yes. Listen, I'll give you 6 steps to prepare yourself that will help the mortgage process go smoothly. All right. It's better score equal better rates and thousands saved, but there's so much more to the mortgage process than just having a really good credit score. I mean, the credit score is kind of like you're dating. People judge you before they even meet you, and there's a whole lot more to the mortgage aspect than just your credit score. Sure, they're going to pull that, but they're going to be looking at the job. They're going to be looking at how your income has changed over the past 5, maybe 10 years. This is an investment for the mortgage company just as much as this is an investment for your future by buying this house. And that's another thing. So what's the difference between going to a bank to get a mortgage and then I'm using a mortgage brokerage organization? The difference is the bank, typically they're just using their rates. It's their underwriters and that's it. A mortgage broker, and I have a great mortgage broker that I work with. I'm happy to share with you his name and his organization. They shop several mortgage providers, several different types of loans. It can be a VA loan. It can be an FHA loan. It could just be a simple conventional loan. They know how to traverse this path. Mortgage brokers do. And they can get rates from several different companies. They can say, hey, this is their credit score, but this is their overall job. This is what they've been doing. This is what they've been making. This is how consistent. So they can tell the whole story to several companies. And in essence, they're shopping for you to get a better rate. And that's the difference between a mortgage brokerage and just a bank who's just out there looking at their own rates typically. Make sure that if you're in the process and you want to do this a year from now, go ahead, pull that annual report. Make sure that there's nothing out there that's going to gum up the works later on down the line. Pay down your credit cards and stop opening new credit accounts. The guy that I had who started the whole process, getting pre-approved for a mortgage, went and bought a car, and I'm like, well, that's all she wrote. You're going to be waiting for a while. So think this through. That's why it's very important to get a realtor that you're comfortable with, and they can walk you through this. They can introduce you to a mortgage partner who can help you not only get pre-qualified, but help set the stage for what is next. So keep that in mind. There's a ton of tips that the mortgage broker can provide you that will help improve your score over time. So let's clarify. Even if it's FHAs or a VA, you'll have some upfront costs. This is asked of me a lot. Just because it's an FHA or VA loan doesn't mean you're not going to have some upfront costs. Everyone's going to have these upfront costs of an inspection, and that's an inspection of the overall house. It's an inspection for insects. It's an inspection of everything. So there's some upfront costs that you're going to have to make sure that is a viable investment for not only you, but for the mortgage organization. They want to make sure. Don't be that buyer who shows up with a $2,750 and a smile and say, okay, I'm ready to buy my house. That's just not the way it works. Let's talk about some simple math here. Right? This is always very curious to folks. Right now, it's pretty much $100 per thousand. That's what it's going to cost you in payment wise. So consider that. That's why it's so important to get pre-approved for your current income to find out what your total assets versus your liabilities that you have. So, if you haven't started one, start a house fund, because when you go to buy a house, one of the first things as an agent that I'm going to ask you is, do you have earnest money? And how much do you have? Earnest money is the amount of money that you write a check for when you make your offer on your house. Now, earnest money is not required. However, that earnest money does show the seller just how serious you are about buying their house. So let's just think about that. Get you a piggy bank, whatever it takes, automate your savings, and make sure that you've got your P's and Q's together. I mentioned a second ago, they're going to be looking at how much you bring in and how much you got going out, and that's called the debt to income ratio, the DTI. A bank doesn't care how nice your boat is. When you go in to borrow money for a boat, to them they just see the debt. That's all they see. With a house, it's dramatically different. I had a buyer who went and financed the furniture for their new house right before closing. We're right up on the finish line. Well, lenders check before closing to make sure that nothing has changed. They checked. Something had changed. They'd taken on a large debt. So therefore, they canceled the closing. So I cannot emphasize this enough. Don't be going out and making large purchases after you make an offer, after you started the process with a mortgage. Stop it. Some of the things they're going to be needing, they're going to need your W-2s, tax returns, pay stubs, bank accounts, copies of everything. Lenders want to know everything except for your blood type. And I'm pretty sure they ask you that later on. And, I'm not entirely sure why they wouldn't ask for that at the time of closing, but they'll probably ask for your blood type too. So it's so important that you have to have a very reliable mortgage partner. And again, I'm happy to share the ones that I know of who are very upfront and forthright with you. Hey, these are the pitfalls that people fall in when they're buying a house and they're getting a mortgage. So, you got to keep everything, scan your documents, make sure that you are being very good custodians of your financials. It's amazing to me how quickly a mortgage can go off the tracks. I've mentioned pre-qualification. Pre-qualification is not pre-approval. Pre-qualification, most websites, most lenders have websites you can go and pre-qualify, and that's an estimate. So based off the information you've provided them, you can afford a house between $200,000 and $300,000. All right? That's if everything you provided them has documentation that you can readily provide and that your credit score is probably 625, 650 and above. Pre-approval means that everything has been verified. Your income has been verified. Taxes, your DTI, your debt to income ratio, all of that has been verified, and you have a strong story when you go in with a pre-approval. A lot of times pre-qualification is fine for many homes to make an offer on. Just make sure that you have this conversation with not only your mortgage lender, but also with your real estate agent. In all likelihood, your agent's going to ask you this. I always ask my clients, hey, where they are in the mortgage process. Listen, this pre-approval is so dramatically different than pre-qualified. So you've got to understand, pre-approval is absolutely 100%. I'm crossing the finish line of this marathon. Pre-qual just means, I could probably run a marathon. So keep that in the back of your mind. Plus pre-approval, you can make a stronger offer. So this is something to think about, especially in multiple offer situations. And I encounter those all the time. If it's between two buyers who have the same financial situation, but if you're pre-approved and the other ones are not, in all likelihood, you're going to win every time. So let's talk about fixed and adjustable versus adjustable, and FHA versus conventional. Picking the wrong loan is like picking the wrong haircut, Eventually everything will grow out, but you will regret it for years. So make sure you pick wisely. Shop your lenders. That's why it's always good to have a mortgage broker who has several lenders at their fingertips. There are several programs. Right now, Kentucky is running several programs for new home buyers. There's grant money that's available out there. So keep all of that in mind. That's why it's so important, again, to have these relationships. So let's recap this list quickly, And down in the comments, which of these steps do you think trips people up the most? I'm very curious. So, because, if you're in Kentucky and you're thinking about buying, you just don't go out and just buy a house. There's plenty of steps that you need to go through before doing that. And that's building these relationships. Understanding the process is key. And by all means, go get pre-qualified, not pre-approved, before going out there. Look, you'll get a pre-qualification letter. Same for pre-approval. Let's just make sure that that's done. But do your homework. Go ahead and ask for that free credit report. Find out what they have. And it's a perfect time for you to go ahead and put in or notify creditors that shouldn't be on there. You've got to get that cleaned up. You don't want to have to clean it up when you're in the process of getting your loan approved. That just makes things last a lot longer. Thank you so much for listening in. Again, I'm Bart with Life in the Bluegrass. It doesn't matter if you're looking for a house in the next 9 days or 90 days. I am here to help. So please shoot me a DM, a text message. Let me know what you're looking at. I have plenty of mortgage brokers out there who are ready to help. Let's go ahead and get you pre-qualified. Start looking at homes and not waste another minute. There's just no time to waste to get your dream started. That's for sure. Everybody, please share this if you know someone who's buying a house soon, and we'll see if we can get something going for you. You take care and have a great day. Let's make home happen together. Thank you.